Yes, we're in the middle of tax season. When you're filling out your tax returns, you might notice your refund is smaller this year.
Denver 7's Micah Smith breaks down what you need to know.
Between inflation and another interest rate hike, you may have been hoping your tax refund would provide some financial relief this year, but it'll likely be smaller than expected.
The biggest changes that people will see is under the American Rescue Plan, was a lot of relief and provisions were expanded. Those are either reverting or going away. So for instance, the child tax credit, that increased up to $3,600. That's going back to pre-American Rescue Plan $2,000.
TurboTax CPA Lisa Green Lewis says that non-cash charitable contribution of up to $300 that most taxpayers could claim is also going away.
Make sure you have all your receipts together that are worth deduction. So no matter what stage you are in your life. So if you're a parent taking your child to daycare, that's worth that credit.
The daycare credit was as high as 50% last year, and it is now dropped to as low as 20%.
Taking a closer look at Colorado, smart tax and accounting agent Carlos Castro says there is a little bit of good news for parents.
The state has actually added their own version of the child tax credit, which is 10% of the federal tax credit. So it's not huge, but it's an unexpected surprise this year on your Colorado return.
And Castro says after preparing returns for several local families, every dollar counts.
2021 tax year, we saw many families getting refunds in the high thousands. And this year, they would be less than half if the situation was exactly the same.
But both Castro and Green Lewis say even if your tax refund isn't as much as you hoped, the sooner you file.
The IRS is stating that they will issue 9 out of 10 tax refunds within 21 days or less of acceptance,
the better. Reporting in Denver, Micah Smith, Denver 7.
Now, you should know Colorado lawmakers are working on a couple of tax credit bills.
Democrats introduced one that doubles the maximum gross adjusted income threshold for the child care expense tax credit from $60,000 to $120,000 for married couples filing jointly. It would also double the income threshold for the low-income child care expense tax credit.
Another Democrat bill increases the earned income tax credit that someone can claim on their state income tax return. The bill also changes the definition of eligible child to match the age of the federal credit. It increases the percentages of the federal credit that someone can claim for the child tax credit on their state income tax return, depending, of course, on income level. And a Republican-backed bill would extend the child tax credit for 3 years and expand the types of contributions that qualify for that credit.